Amit, hi, good to have you with us. How have you been?
I'm doing good, Ashu. Thank you very much for having me here.
Amit, it's a pleasure to have you with us. Excited to have you with us for a variety of reasons, right? One is, you're kind of you're building Insurance in the space of insurance, right? Now, something which is, possibly the last frontier when it comes to, financial services, right? As a whole, and a massive opportunity, right? Especially with the numbers that India presents, but also because, you've been a telecom professional pretty much also, right? And from that to moving into a completely different sort of a business, right? I think is very, very interesting. And my sense is, I think and I would love to talk about that towards the end of a conversation, right? Because, my sense is, these conversations are multidimensional, right? And I think this dimension is just so much more important because there are a lot of professionals who are at the fence, right? Who are constantly thinking of crossing over. For some reason, personal and professional, they choose not to, right? We're going to spend some time towards the end of the conversation talking about all of that. But before we do all of that, I'd love you to give us a quick round of introduction, all of what you've done in telecom, quite a bit that you've done, and we move into a conversation on Insurance.
My telecom journey has been about 8-10 years. Prior to Ensuredit, I was the VP and CBO at an AI IoT firm called Smartron for about a year and a half.
Right.
We were doing an AI embedded, a distributed horizontal platform. But we used to do a lot of other device categories as well. So we were doing mobile devices, we were doing convertible laptops, we were doing home automation systems, so on and so forth.
Sure.
So that's been my year and a half at Ensuredit. We actually did some really amazing work out there for the short period of year and a half that I was there. We were the first ones to kind of introduce an ECG monitoring wearable in the country, actually ahead of Apple globally in India. Prior to that, I was for about 6.5 years. I was at Motorola. I spent, for my initial couple of year and a half, I was leading the strategy for India and Asia Pacific for a while. Then I took over as the country head for Motorola for about 4 odd years. I was there.
Interesting.
So yeah, and then really for good or bad, from my claim of fame out there is that I was the guy who introduced the online marketplaces to mobile devices. So before Motorola launched its first Motorola Moto G exclusive Flipkart, prior to that, phones by and large, about 99.9% of them were sold in offline store, mom and pop stores.
Interesting.
So yeah, me and my team, we were the first ones who said, let's go online, we'll sell phones online, and we believe that's a huge market. And we were able to grow Motorola at that time practically from zero revenues to close to $1 billion in less than about a year and a half.
Very interesting.
So yeah, that's been my telecom side of it, primarily on the consumer side of it, on the hardware side of it.
Super. Amit, it's good to have a man with many firsts, right? Not just for himself, but I think for the country at large. And I think that's no mean feat, with any standard, by any standard. Amit, moving into Insurance, right? I'd love to understand the construct of it. Where you are, what is it? How is, for example, Insurance designed, and what is the market that you're kind of empowering, right? My sense is it's a B2B, it's an enterprise play, which essentially enables and empowers, a lot of these foot soldiers, right, and distributors who are out there, who are essentially whose job is to understand the customer right, profile the customer right, and then and pick and choose. And there are many options when you talk of the insurance, the product lines, right? A lot of occasions, what happens is there's a lack of understanding, lack of depth, and a lot of these agents tend to get swayed by the possibility of higher commissions, right? And that becomes a priority, not necessarily understanding the right risks when it comes to the consumer, right? It becomes important. I think that for that reason, I think insurance is there's a certain distrust which is also got created. I think unless you have the right kind of technology and that assistive piece of technology, I think it just becomes very difficult for people to do that, right? You're doing that, you're somewhere there empowering a lot of these people. Would love to understand some of these nuances.
Sounds great. That's a great question, actually. Let me take a step back.
Sure.
Our inspiration and the genesis of Insuredit was in saying that here's a country which is a top 5 economy in the world, top 3 by purchasing power parity, and as an insurance economy, I don't think we are even top 15 or top 20. And if you look at category to category, I think life we may be top 15, 18. In general insurance, we're probably top 40 or something like that. And that disparity by itself is something. If you correlate that with the low insurance density and low, propensity to buy in India, you can see why those correlations kind of emerging out there. Now, as we were looking at that, we started looking at, so many people have talked about it, and so many people have said that there needs to be a concerted effort in terms of growing penetration in India. Why have people not been successful in that?
Right.
we believe that there are two major key critical success factors in making sure that insurance can reach nook and corner, it reaches masses. One, and that's broadly one everyone talks about, is the product by itself and the product width. Do we have the right kind of products? Are they covering the right kind of risk? Are they in the right price points? And how do we make them available to the consumers? The second part of it, and which I think is a trickier problem, and that has not been solved very well so far, has been the cost or the marginal cost of distribution expansion is very, very high.
Interesting.
Which means that the moment you start going into tier 2, tier 3 markets, really the unit economics of sales starts falling for insurance manufacturers.
Sure.
Now, even if that's intermediaries and the onus of distribution expansion is on intermediaries, for them it's even trickier, right? And
right.
They work with 5, 8, 10, 15 different insurance companies. I mean, it's not really their onus to increase distribution for anyone else. They just try to do it for themselves.
Right.
So, what does it take to really crash the cost of distribution expansion by, let's say, about 10x? Mm-hmm. And we said that if we could combine, or if we could connect the supply side and demand side via intermediaries a lot more easily, and let's say have a digitized pipeline, does that solve the problem? So as we are getting close to that thought process, one of our initial ideas was to, for example, become an insurance broking company or a corporate agent, build up the tech stack and say, sure, we'll go ahead and do that. And then we realized that there are quite a few players in the market who are already doing that with various degrees of success. Mm-hmm. And we decided, let's say of the licensed entities, and I'm not talking about agents only, if you look at entities, sure, there's probably like 1,500, 2,000 odd entities across the country, which is banks, broking companies, corporate agencies, IMFs, so on and so forth, right? Sure. And our view was that for them to get access to a distribution platform which helps them compete with, let's say, well-funded, financially stable, large companies who can spend 2, 3, 5, 10, 50 crores in technology stack, and then therefore digitize and broadly distribute, these guys can't do, right? We decided to be that player. So we decided we don't want to be the distributor of the insurance ourselves. We'll become a pure play technology company. So we operate as a SaaS company. We provide our system to insurance intermediaries, and then we have deployments through web browsers, and we have deployment through Android app and so on and so forth, that they in turn can hand over to their sales force or their point of sale people or cost for that matter, and enables them to sell. So, and to enable that, what we do is we integrate for these insurance intermediaries with insurance manufacturers. So today, for example, we are integrated with about 34 different insurance manufacturers across life, health, and other categories. And across these categories, we provide the system.
Very interesting. Now, Amit, what I want to understand is the other side of it, right? Now, one side of it is the distribution side of it, right? Where you're empowering the people at the last mile, right? These insurance agents, right? Or advisors at the last mile, right? And the channel that you're taking is essentially, partnering with the manufacturer, and when the manufacturer endorses the application, right, to the advisor, right? Now, what I want to understand in this process, one, is that a correct understanding when I'm visualizing this in my mind? Second, what I want to understand is that, is this more a reference system which is available for the last mile advisor, or is this something which is an interactive system which is intelligent enough to understand me as a client, as a customer, understand my risks, right? Understand what my profile is, and bring in those dynamics to pick and choose the right product for me. Would love to understand where do you stand on the product side of it.
So just from an understanding perspective, as I said, we integrate with insurance manufacturers on the supply side of it, but that integration is essentially for the intermediaries, right? Because they are the licensed ones. Sure. So there's one, let's say, a broking company that works with 10 different manufacturers, and then there is another one which works with 5, or somebody works with 20. We help them basically get connected to that, right? So we provide the building blocks, we provide the system that enables them to do that. So to that extent, we are enablers of insurance intermediaries first, rather than the insurance manufacturers themselves.
Okay.
Right. So insurance manufacturers, therefore, to that extent, become API providers for us to kind of build out this system in entirety for the intermediary. Now, de facto and by proxy, it helps insurance manufacturers themselves broad-base their distribution. Of course, yes. Right. But we focus on the intermediary business rather than on the insurers themselves. Right.
Very interesting.
That's one. Now, second part of your question. So our system is an end-to-end system. So think of it like running an insurance distribution business in entirety. So right from insurance manufacturers from a supply side being there, to their products across various categories being there, to the entire sales journey, which is your quotation creation, proposal creations, making the payments, getting the policy download, and then for the entities themselves as a post-sales, for example, being in a position to endorse a policy, to make changes to that, or to get commission and revenue reconciliation done and get the reporting and analytics done. So we do the whole thing, right?
Okay.
From a consumer perspective, see, insurance, 95 to 99% of insurance, by and large, is intermediated business, right? Which means there is somebody in the middle who's doing it, right?
Sure.
Even those players who are so to say pure play D2C have call centers and other things, calling up consumers and saying, this is what the nature of the product is. This is an intermediated business, and products tend to be a lot more complex, right? They're not as simple as, let's say, a savings product in a banking or on a financial side of it. So what we do is we try to make the entire policy understanding, readability a lot more easier for the agent.
Okay.
Right. We try to make sure that as a consumer is providing his or her data, that the agent should be in a better position to recommend what may be a better coverage product.
Interesting.
Now this can be done by providing notes on various products or product data sheets that come from companies, by giving a wider set of products available to them, by giving them larger price points, right? So if you need, for example, a personal accident product, you don't need to buy a 1,000 rupee policy. It's 150 rupee policy. Then I should be able to kind of provide that top of product to you, right? So from our perspective, we simplify the entire journey. We simplify the policy and the product understanding as well, as much as we can, right? Where we stop though is we do not recommend what policy should be sold to the customer.
Okay.
Right? And the reason for that is, as a part of the regulatory mandates and as a part of what an agent does, that is really what an agent needs to do, right? He or she is the insurance expert. We can recommend and provide the larger width and provide all the data points that he or she must look at to make that decision and recommend. So we stop at that level and provide those inputs.
Very interesting. Very interesting. Now, Amit, why do I ask you that question, right? And I think why does it become important? I understand why you're doing what you're doing, right? And in a way, you're right? You're not crossing over the line, and this is just so much more important because regulatory compliances are very clearly defined, right? And I think the role of an advisor is also very, very clearly defined, right? Now, unfortunately, what happens is in the changing environment, the changing dynamics, right? And more often than not, and for some reason, right, a lot of these agents that you come across, right, are not necessarily, that's not the first career choice of sorts, right? These are not people who are very efficient, right? Who possibly need a lot more hand-holding, prodding at a variety of levels, right? What they're leveraging is the network that they have, right? Some sort of, say, a certain community that they belong to, certain access and inroads that they have into a certain, say, a set of people or whatever, which basically brings in their ability to sell and cross-sell and monetize that, right? On a lot of occasions, a lot of these products that are sold, right? And that's possibly the reason, insurance has been sold in India for the last 20-25 years, right? Unfortunately, we are still very, very starved when it comes to insurance, right? Some reason is cultural, but a large part of it is that the impression that has been created, right? Do you think, and how possibly you are solving this, right? Because you are empowering a lot of these guys, right? How are you ensuring that they understand these nuances and the changing, say the nature of policies and the risks that are there, right? And there are so many other dimensions to it, right? How do you ensure that they are, agile and active on the ecosystem that they're giving them, right? Because, that engagement is just so much more critical to creating the kind of impact that, one is supposed to, right? And this large market that we talk about. How are you doing that? I'd love to understand that.
So I think there are two sides to this. I think one is that if you look at agents who are selling, by and large, I would want to believe, and this is our experience, this is our dipstick checks with the larger world. I will say mis-selling is a very, very small component. It's an extremely small component. But what does happen is that as क्या कहते हैं हिंदी में हम कहते थे पहले, right? एक मछली पूरे तालाब को गंदा. It's that scenario, right? Because if you're one consumer who has been missold a product, the bad experience of that one consumer will hold back another 20 from making a good decision, right? But to that extent, I think there are two things that need to be managed in this. Is it a deliberate mis-sell, or is it a complexity of the product itself?
Sure.
Right? Like you said, I mean, if a lot of these agents for themselves, for example, they are not understanding the product themselves very clearly, then you can assume that the chances of mis-selling will increase.
Right.
So what we do is, and that's where we said, what we do is we try to deconstruct the policy in a lot more meaningful way.
Okay.
So if you look at the entire policy document is sent to the consumers. You can share it with them. You can WhatsApp it to them through our platform. But we will also give you 10 bullet points of what are the key inclusions, what are the key exclusions, right? Because by and large, that is the bulk of or the bulge bracket of that policy, right? So we provide those inputs for the agents as well. And by and large, we provide this facility for agents to share that with their consumers as well, so that there is a lot of clarity around it. The second thing that we are doing is we do believe that a lot of agents, because by and large policy documentation today is English.
Right.
We believe that this needs to become vernacular.
Interesting.
So what we are trying to do is we are trying to look at our platform transitioning into a more vernacular form. Now, a lot of people say that vernacular form of platforms may not get that kind of an uptick, but we are okay with that. We're absolutely okay with that, because we believe that even if it solves the problem, another 10%, another 15% is absolutely worth there. So I think it's both things, right? It's simplifying, it's information transparency that needs to be created between the agent and the buyer. And it's also a lot of knowledge base that needs to be provided to the agent continuously, right? You cannot introduce a new product, and insurance companies obviously keep on introducing newer products all the time. Right. You cannot introduce a new product with new inclusions, exclusions, and then not have the agents well trained on that.
Completely right.
So we try to enable a lot of that through our system. We try to make sure that consumers, the agents or the sellers get access to a lot of that. But it is something. It is something that will always have a little bit of a back throttle, so to say, right? There will always be some kind of a mis-selling, because as I said, the products by and large themselves today tend to be a lot more complex. I think one big thing that we need to do as an insurance market ourselves is to see how do we simplify the policy and the policy wordings itself so that it's easy to understand.
Interesting. And I think honestly, Amit, I think it's about solving the foundation first, right? Solving the foundation first, right? I think that's essentially what you're kind of providing, right? I think mis-selling and other these aspects, I think are possibly the second step, right? Or fall in that category of second steps, right? Where you can kind of handhold them and you can improve your practices, right? On the platform. Now, Amit, a bunch of questions that come from this, right? I particularly like this vernacular approach that you've taken, right? Especially in a market like India, it's just so much more important because, while you and me have that comfort of talking in English, right? But when we talk of larger India, local languages are very, very critical, right?
Yeah.
And I think, unless these agents understand those nuances, right? Or the policy terms and conditions, within their own language, right? I think their ability to communicate just is so limited, right? And that also leads to a large part of mis-selling. Not really mis-selling, but I think, lesser understanding of their client and eventually a wrong product being sold in the process, right?
If I may, Ashu,
please.
I genuinely think that a lot of mis-selling is miscommunication.
Correct.
Right. So I think if we solve for communication and we solve for the transparency of communication, I think we'll start taking care of a lot of that other issues, right? And those are consumer side issues.
Right.
I mean today obviously we have 15 days free look periods and so on and so forth. It gives them an opportunity to cancel, right? But I think they need to understand that in simpler terms, in local language, in easier, palatable, bite-sized information, so that they can make a correct decision. And I think that's important. And that, like you rightly pointed out, I think is very, very foundational to how we solve this.
So I started my career as a banker, right? And I have had a fair experience in the insurance ecosystem, right? Mm-hmm. Trust you me, the 15-day lookup period, right? A large percentage of people miss out on this, right? Because when you've been sold this product of insurance, right? It's essentially come from some sort of reference, right? To the person that you know, and you're essentially buying it in trust without necessarily understanding those nuances. And I think the Indian sort of the way we've been cultured, right? I think we look at the dependability, right? We look at that, is this system available on call and all of that, right? I think that institutionalization of selling insurance, right, from buying from say an unknown source, I think is still something that which is kind of picking up in many ways. I think you look at reference points, and that is the reason we have avenues like banker insurance and a bunch of other things, right? Which insurance is riding on top, right? I mean, coming to through a COVID-like scenario, right? Now, this is something that we never experienced, right? It's kind of accelerated the growth of insurance in general, right? People have become a little more inquisitive, and this is not a trend that we're seeing in urban areas. Urban areas were always aware and savvier, right? And had access to insurance, but this is something that we're seeing across tier 2 and tier 3 India as well, right? People have gotten very serious. The other thing is that general insurance, for example, has become, everybody's looking at it, right? People wanted to buy it for everything, right? General insurance was never, an exciting part of insurance for a variety of reasons, right? What's been the rush that you've seen there, right? What's been the growth that you've seen there? Is that become a very critical part of the priority that you have? How are you looking at it?
Yeah, I mean, you're right. I think what COVID has done is it has kind of compressed the education effort that the industry needed to do for probably like a 10-year period, gotten in compressed to 2-year period. Unfortunately, at the cost of lives, but it did get compressed to that extent. So we do see significantly lot more awareness among people. We also see institutional awareness coming in, that's why you will see a lot of push happening on the SME, MSME side of it, right? And SME, MSME side of it is very undercovered for the lack of right words.
Okay.
So I think health is something that you will see significantly getting an uptick on. I think what this has also done is it will open up novel channels for us to reach out to larger consumer bases. Like you said, I mean, urban areas and semi-urban areas in India practically consume anywhere between 90 to 95% of distribution access. The rest of the country actually gets single-digit distribution access. But I think what as that awareness increases, and I think that's where the innovation on the underwriting and the product side is going to be very, very critical. If we let go of this tide of understanding and an organic demand for some set of coverage, but it gets backed up by products that are not really good products or don't fit in budgets, I think we're going to miss a huge opportunity. So I think newer channels will emerge. I think newer product categories are emerging. I think, and across price points are emerging. And I think delivering those products through these innovative, nice channels, which are trusted channels, right? So imagine for a moment you have and I'm just saying it top of the hat, not naming any company specifically. You have a payments bank, right? You have CSCs, government CSCs providing citizen services. You have smaller and health tech companies. Their reach is very, very non-traditional to that extent. And therefore that can become additional channels to reach out to masses in general. And this is the right time. This is an organic understanding of insurance becoming important.
Interesting. Now, Amit, there's one more trend that we're seeing, right? I've had the chance of talking to quite a few founders who come from an embedded insurance background, right? Now, embedded insurance is something which has attracted a lot of capital as well. The beauty of it is that it's just so small, right? It literally becomes invisible, right? In a transactional process, right? At least in the general category, it's something which is flying very, very strongly, right? So from a lot of traditional channels that we've continued to, which have continued to be developed and optimized, right, over a period of last 2 decades. Ever since insurance became, from an industry standpoint, right, embedded is something which is just, leapfrogged, right, and covered a lot of ground phenomenally, right. To an extent, there is a certain dialogue that, embedded insurance across all streams, right, including, say, some elements of life that it covers, right, or certain products that it offers, can disrupt, this entire model of channel sales, right? You might not require it in-house. What's your sense of it? How are you looking at it, right? Because this is something which is literally parallelly a distribution channel which is coming up against the ones you're empowering, right? This is something which is far more focused, very piecemeal, very precise, and it's getting structured beautifully, right? How do you look at that?
Yeah. So allow me to get a little bit pedantic here. Okay, let me take a step back. We are very, very bullish on embedded insurance. We're super bullish on embedded insurance. We believe that one of the fastest growing categories of insurance channels will be embedded insurance over the next few years. Right? Absolutely, no question. At the same time, I think there's a specific difference between bundled insurance and embedded insurance. I've seen a lot of people sometimes kind of interuse the term, which I don't think is true, right? So for example, if you buy a product today and you are an opt-in, opt-out situation, are you an embedded insurance? I mean, more puritanically, we believe, no, that is more of a bundling of insurance rather than an embedded insurance play, right? So I think the first level that will basically be a stepping stone for embedded in India will be bundling of insurance.
And that's where we are.
And that's where we are. And wherein it's still a lot more, opt-in, opt-out models. And then we start getting into more puritanical embedded insurance models in which you buy element A, the insurance is connected already to it. It's a part of the process, price waterfall, so to say, as a part of it, right? And therefore, you get the insurance de facto with it, right? I think that it's bound to happen. I think you will see. I mean, some of the larger categories actually, I see that happening is like right from lending to property insurance, and these may be some of the larger categories with large ticket sizes. But these are as good embedded insurance playbooks.
Interesting, but how are you looking at it, right? I mean, vis-a-vis traditional, right, which just requires so much of learning and development, so much of marketing, right? I don't know. I think insurance companies are constantly, trying to go out and create that trust, right? So because that's just so much more critical to the entire scheme of things, right? And here is a play where you're automatically as a consumer buying something, right? It default gets into it, right? Especially from a general insurance standpoint. I think life is something which is going to still take a little more time. But what's your sense of it, right? I mean, everything that we'll possibly buy in just about a couple of years, right, will have some sort of it. And I understand where you're coming from. Where you would say, it's bundled versus embedded, and it's being loosely used. The way I look at it is, while it's bundled, in a way, it's, you're kind of getting it as within that option, right, for that particular activity. And that's the reason I kind of interchangeably use it in this conversation. But how do you see that vis-a-vis traditional channels of distribution, especially on the generation side?
Yeah. No, absolutely. I think, and that's what I was saying earlier as well, that the non-traditional distribution is essentially what India does need to look at very, very significantly, because I think that is where the cost of marginal distribution is still not that high, and therefore you can reach out to millions and millions of people and start bringing them under the cover, right? I agree with you. I think bundled insurance is something that you will see. I mean, one of the ways that I look at it, and again, because I come from a hardware background, is when you buy a phone, you have a 1-year extended warranty already in it.
Absolutely.
You can buy an additional 1-year extended warranty. Now, that 1-year additional extended warranty is already a part of the price that you're paying. It's bundled, it's embedded in it, right? Versus you say, I'm going to go ahead and buy additional 1 year's warranty, it's a bundle. I think increasingly embedded will happen. And these channels and some of the largest e-commerce firms and supply chain companies, even food delivery, right? I think some of these will become and start covering insurance on a swath of areas, right? Including on life as well. But yeah, I still believe that the stepping stone to that is bundling, and then bundling matures more into a single SKU embedded model.
I mean, is that a part of your strategy as well at some point in time, right? Largely you're empowering the intermediaries, with a lot of this information intelligence and ability to pick and choose right for the customers, right? Customer ecosystem is now being tackled in a different way, right? So is there something with all of the understanding that you've built, right? Are you looking at, playing a role when it comes to, embedded / bundled insurance, right? I mean, is there a game plan as far as
Absolutely.
Would love you to talk about it.
Yeah, I mean, from a bundled perspective and micro insurance perspective, both, right? I mean, and what we have done is we have a plug and play system, and because group insurance products, can be sold by master policy holders and so on and so forth. So there is a lot of work that we have done on the small ticket micro insurance group retail products, in which small ticket items like personal accident, critical insurance riders, group term life, right? Some of these can be provided to a lot of these players, right? All of them, and they have trusted networks, they have trusted consumer base, and they can monetize it. We actually call that part of our product monetize for two good reasons. One, that the channels can monetize their channel assets or their consumer assets both, and therefore be in a position to provide value-added services to a lot of these folks. But yeah, I mean, we have taken those initial steps into bundling of the insurance, and we are working on something, and hopefully we'll come out within the next 4 to 6 months time, wherein our plugins for embedded insurance will be available for partners to use as well.
Interesting, super. Amit, another point I think which is very critical to the entire scheme of things, right? Also, in a way, is a take on the markets that we have, right? Now, when you talk about intermediaries, right, in the markets, now intermediary is something, when you talk about financial services ecosystem, right? Be it distribution of mutual funds, be it distribution of PMS as insurance products, all of that, right? Now, for some reason, and because of lack of clarity from the regulators, right? this number is constantly, if not shrinking, plateauing out, right? We're not seeing the kind of growth that we used to sort of see, right? There were many other people who used to be agents, right? There were a lot of working professionals who would have that agent's license in their wife's name or, some relative's name, and they'd continue to sort of do this inside. A lot of that we used to see. Off late that number is kind of plateaued out, right? And the other thing is that there are all these tech platforms of sorts which have come in, right? Which have made discovery very, very easy, right? At least the urban educated audience is now kind of transitioning into it because at a click of a button, you can kind of buy it, right? This entire intermediary ecosystem is in a way, the dependence on it is kind of reduced, right? Now, this is very different from what we started our discussion at, right? Going forward, my sense is, I think, and the way we are kind of transacting and the availability of information, right, online, we might just cut away this entire thing, right? How do you look at this, right? Is this a right perspective? Or do you think for a market which is as large as India is and as divided as India is, and when I say divided, that essentially means with our stratas and our availability of disposable capital and our risk understanding and regionalities, there's a list of complexities that we have, right? This is something which will continue to be there. You cannot do away with this for the next decade too. Like, what's your take on that one?
Yeah, I agree with you. I don't think we can do away with this for the next couple of decades at least, and I'll have two reasons. One is that by and large, globally, insurance is an intermediated business. If you're buying a motor insurance, a two-wheeler insurance, a car insurance, it's a lot more an easier, seamless process to, for example, go and buy it through a B2C storefront, right? But if you're buying a lot more complex product, like an investment product or a term-like product, you need a lot more information and a lot more expertise to kind of come down your way. And to that extent, I think advisors being out there in the middle will keep on being a very important part. If you see globally and some of the largest insurance markets in the world, you will see the dominant channels are still intermediated channels rather than D2C channels. Okay. The number three is, and these are some dated numbers. I may be wrong, so on them dated.
We'll consider them to be ballpark numbers.
Yeah. So I mean, if you compare India's economy in 2021, by and large, it was very similar to China in 2008. Right. In terms of per capita income, GDP ratios, size of insurance as an industry. I think 2020 we were about $90 billion. China used to be about $88 billion. We have about rough and tough about 18 to 20 lakh agents. Everyone else put together. Right. China had about rough and tough the same number. China last year was about $650 billion of insurance market, and their number of agents in the market had grown from about that 15-18 lakh to about 90 lakh people.
Interesting.
So, and as you go down tier 2 markets, tier 3 markets, and you need this advisory to be provided, I think you will see the number of advisors increasing, and I think we should make a concerted effort that there is a larger advisor base available in the country. At the same time, I do think that there needs to be structural changes which makes business or ease of business much better, right? You want to make sure that you have the right kind of advisor getting built out in terms of understanding, knowledge base, ability to sell, and yet be in a position to do a business which helps him have this as a great career as well, right? I think to that extent there are structural changes that are needed, and in last month there's been a lot of amazing forward-looking movements that have happened from an IRDN perspective, and we're very gung-ho about that this market is going to become a lot more open, a lot more participants, a lot more broad-based, and therefore reach masses in general.
Amit, what's your sense of increasing the financial viability for a lot of these intermediaries, right? Because we look at commissions, right? Commissions continue to drop over a period of time, right? And regulators been very conscious and very agile, right? Because there was a lot of selling which was which essentially came and stemmed from higher commission based models and so on and so forth, right? They've reduced a lot of that, which is, as a consumer, it's phenomenal, right? And they've in fact deconstructed a lot of products which were essentially being sold as savings products, right? There were a lot of those complexities which were there, right? What's your sense of it, right? That to me seems another disincentive of sorts, right, for people to be doing something. So while I understand where you're coming from, right, that China has had this number, we as a country need this, right? The financial incentive is just so much more limited for one to be looking at this as an option, right? Especially in a developing economy. There are many other opportunities that give you options that are far more viable. How do you justify this in the process?
So one is that from an insurance perspective in general, I believe that despite the fact that we are now talking about India being a $110-120 billion market, I think we're just getting started, right?
Sure.
This is only going to grow much faster, and it's going to cover a lot more people. What it really does need is that, and that's where I said that one of the core problems that we decided that we wanted to solve is distribution and tech-enabled distribution, because that is a lot of cost in the overall pricing stack, right? If you have to go to every tier 2 and 3 market and need to have an office after every 5 kilometers or 3 kilometers or 4 kilometers, you're not going to be, no one is going to make money, right?
Completely.
So tech-enabled distribution, in my opinion, is the seminal answer to how do we reduce the cost structure of the industry by itself. I think if that happens, then you are in a position in which even with lower margins that that can be on the table for intermediaries and agents, there is still significant amount of money that all of them are making to have profitable, good businesses and good careers for agencies as well. I think, and this has been, in my opinion, the deeper end of the sea in the industry, right? And this, I also think that this is a circular positive system. If you reduce the cost of distribution, you reach more people, you have more people in the ambit, your risk pool increases. The risk pool is higher, your ability to underwrite more sharply at a micro level increases significantly as well, which means that you can have more right products, more pointed products, and more product and the pricing width available, which means that more people become eligible and therefore start buying it as well. I think that circular logic starts coming into play. But yeah, I think tech-enabled distribution is the first step to enable some of that.
Super, great thesis on that one. Great thesis, and I like all of that. Right? I think it just sort of serves the the purpose of each stakeholder in the process in the right way, right? And I think mis-selling is something which is the industries we play with, right? I think kind of automatically gets weeded out in the process.
Absolutely.
But by a large percentage, right? Now, Amit, what I understand, and like I said, right, I've been in this industry, I know this industry very close, right? I understand for the fact that technology-led systems like the one you kind of empowering a lot of these intermediaries with, right, have a definitive impact on relationship, right? Because now as an agent, he or she has so much more clarity in terms of what's to be done and what's not to be done, right? I'd like to understand some numbers there, right? What's been the relationship impact that you've seen, right? And I think you're clearly in a position to, at a vantage point, if I can put it that way, to make a comment on that, right? What's been the relationship impact, of agents who've been using the system, and would love to understand some of the numbers that you've been able to achieve in the last, in this journey. How has that relationship taken over a period? How have you been growing? Would love to understand that.
I think the net positive impact of a digital platform is tremendous, right? For two reasons. One is that you can increase the agent productivity by about 2-3x. Today, right from getting a quotation, it would take an agent in the market a lot of time, right? Now, if suddenly, you have to, if you let go of all those phone calls and WhatsApp going and to and fro between the offices and the people feet on the street, you're saving a lot of time. And that way itself increases the productivity. So if an agent today was doing, let's say, 2 policies, 3 policies a day, you can now probably do 5 policies a day, 6 policies a day. So the impact on the agent side or the advisory side can really be significant, and you're kind of, and the consumer ends up getting the policy then and there, right? You're not saying, okay, give me the form, fill up the form, give me the check, it goes after 3 days, policy milega. You can get it then and there types. So I think from an advisor's perspective, from an agent's perspective, I think it adds tremendous amounts of value to them. See, in total, we have currently about 90 plus clients that have signed up with us over last 2.5 years since we went operational. And we have some of the larger players in the market who signed up with us, marquee brands, within the intermediary industry. In total, last year we looked at about 35,000 policies which were done through the system.
Very interesting.
Yeah, and we
and these are completed policies.
Of course, yes.
And issued. Interesting.
Across our different set of clients, right?
Interesting.
Across our different set of clients, and I mean, really, what we are aiming for is that if everything, and obviously we had just one class of product now. Then we expanded that. We are kind of bringing in the OEM bits, we are bringing MISP, and we are bringing other classes of products as a part of our platform integrations. I think as some of that ends up, I think we could be looking at thousands of crores of policy in GWP terms flowing through the system.
Interesting. Amit, I'd love to quick comment on the business model, right? I mean, when you talking about 60 plus clients, right? My sense is you're talking about broking clients, right?
Yes, broking clients, broking clients, corporate agents, IMFs.
Corporate agents. Would love to understand, right? How is the business model working out, right? I mean, is this like an enterprise suite that you're doing where you have like a master plugin of sorts, or are you doing a per head count, right? Per policy issuance? What's the pricing model? I've got to understand that.
Yeah, so we're typically on a SaaS model, so we charge a very minimum upfront, onboarding fee, and then we charge basically per the number of feet on street that come on board onto the system. Sure. So and what we do is we have like absolutely low levels of pricing. We want to make sure that anyone who is interested in selling insurance and is allowed by law to sell insurance can get access to the system and start selling insurance, basically.
Super. And you're not in any way sharing the commissions that are generated by sales of these products, right? Is that a no-go for you?
No, so we don't share, we don't get a cut of the percentage of commissions or anything. Yeah, we don't do that.
Interesting. Amit, towards the end of the conversation, right? What are the next 2.5 years like, right? You're at a very interesting point. You have some very strong relationships going. Last 2 years it's been painful, but it's been spectacular, right? At least, all of what could have done in next, say, possibly a decade, right? But what was possibly done in last 2 decades, right? I think all of that got packed into the last 2.5 years, right? I mean, the seriousness around insurance has just become so much more larger, right? Intermediaries also become agile, right? Because there's a certain responsiveness that they're getting from the clients and customers, right? And I think that responsiveness is going to continue because a lot of people, all the losses that we've seen, right, has touched people at a personal level, right? So the seriousness is going to be there, right? It's a perfect playing field in that sense, right? What are the next 2 years like? What is it that you are aiming for? What is it that you've set? The milestones that you've set for yourself?
See, at a vision level, honestly, for both Rohit and me, who's my co-founder, one of our consistent conversations have been that we want to make sure at some stage that every Indian has an insurance, right? And to that extent, whatever we can do in terms of providing a system, making access easy, access simpler, access cost effective, we want to do that. We want to bring in a lot of elements of trust into the playbook. So we are, for example, already evaluating what are blockchain-based solutions that we can bring in. If you look at, for example, life insurance, can we provide solutions around anti-money laundering? If there is GI play, can I do if this and that kind of a playbook? Can I bring in IoT in the middle and help, and we may expand our playbook. We may work a lot more closely with insurance manufacturers themselves and try to bring these solutions. So, I mean, we are going to look at everything which is very, very technology forward, technology first, and that fundamentally has an impact on taking insurance by and large to every countryman.
Interesting. So that's at a vision level. That's at a vision level, more granular, right? What are the next 2.5 years like?
I think in next 2.5 years time, we want to make sure that practically about 50% or more of insurance intermediaries in India are utilizing our system. That they are basically have access to all the insurance companies. We want to make sure that we have 100% of the insurance manufacturers in India which are integrated onto our system for the intermediaries or through intermediaries. So we want to be the default platform across insurance categories, whether that's retail, group, or commercial lines, and say for anyone to say, I want to digitally sell this, you got, it's a straight out there. It's standing in front of you. It's Insuredit.
Interesting. Amit, last question in this conversation, right? Something that I wanted to cover, and I was itching to cover, right, through the course of our conversation, right?
Sure.
Is that, you've been a professional with a lot of, diversity in your working experience, right? And you've chosen to cross over. This is a more cliched side of, the conversation, right? But I think it's always very interesting to, close the conversation at this point is, registering suggestions, advice that, my guests have for the larger audience, right? Because, like I said at the start of the conversation, right, there are a lot of people who, are at fence and for a variety of reasons, they're not able to cross over. I'd love you to give out that advice suggestion that you would want to, right? Or experience or choice that motivated you to take the call that you did, right? Would love to have that as a closing sort of a comment.
I think in my case, and I can speak for Rohit, my co-founder as well. By and large, it's been that we have had, God was kind, we had decent enough careers. Rohit used to, lead a lot of go-to-market work around emerging technologies for PwC out of their New York office. He was outside of India for about 8-10 years and worked for EY and Moody's and PwC.
Right.
And he and I are childhood friends. So we used to keep on kind of talking about, doing something together and what can be a large impact area, right? Now, he came from financial services, I came from the hardware background of it. as we talked about a lot of things, insurance emerged as that area in which we thought that there is actually not a lot of work that has been done. And I always say, of the larger fintech world, insurance has been the the lesser one, right? And I also think that it's a lot more complex as well. And he and I, as we talked about this for like 2-3 months over a period, in 2018-19,
right?
And it became a passion project, right? It became a passion project saying, I mean, we have done what we have done in our careers. I mean, we can keep on doing what we're doing, and it's great. You'll probably make a lot more money, and you'll probably have larger spans of control. But that was about that, right? I don't think I saw us making a lot more meaningful difference to people in general. And both, as I said, Rohit and I, because we're childhood friends, we come from the same background, we have seen similar kind of world, right? So we decided that we're going to get into this industry and try to change it for good of everyone. So
interesting.
For us, honestly, as much as it is, and I understand this is a business and there is an element of capitalism to that, but for us, this is very deeply personal. This is very deeply personal in a sense that we want to make sure that we can change our country's fortunes for good.
Wow, amazing, very impactful. But what's the suggestion that you have for people?
I think people who are at the fence have to come and be entrepreneurs, because if even as an entrepreneur, right? If you fail, God forbid you fail as an entrepreneur, the experience, the learnings of entrepreneurship will take you back to a corporate job that will be more paying, and your skills and everything else will be rewarded very, very significantly. But the chance, you have to give to yourself the chance to make the impact, and I think to that extent, every fence sitter owes it to himself or herself to go to the side of entrepreneurship.
Super. Amit, this is an absolutely spectacular conversation. I can't say this very often, right, towards the end of the conversation, but this has been an absolutely spectacular conversation, right? I think it's been deeply, energizing, largely because, you're cutting for a very, very, very large market, right? A very underserved market, but a market which has complexities, but also it gets balanced out, because there is this, inherent need to buy it, right? People are essentially in a zone where they're kind of deferring it. I think last 2 years, 2.5 years have been very strong proponents, at least to create an impression that this is a very critical priority, right, for each household, for each member. Be it on their general requirements, be it on their life-related requirements, right? The risks that they learn from their lives, and I think times have become just so much more dynamic, right? I think the need for having right infrastructure in insurance is just so much more important, and I think that's essentially what you're empowering. In a market which is as diverse as India is, and as complicated and as spread out as India is, you will continue to need a lot of people at the last mile, and I think it just becomes so much more important to empower these people at the last mile.
Absolutely.
So that right products can get offered, and these aberrations of mis-selling can get weeded out in the process.
Absolutely.
Amit, thank you so much. It was a pleasure to have you with us.
Thank you very much for having me. It was a pleasure talking to you, Ashu.